Um, as you can see that this is just looking at the daily chart, you have a structure point of 132.66 today, just trading below that. I mean, you could have been playing the 132.66 yesterday on Friday, and today it would have been quite interesting. And of course, this is the volatility that is coming into the market because of Greece. And I was actually writing an article today, and this is the beauty of the markets. This is the beauty of the price action. This is the what I love about price behavior. Just take a look at this chart. If you watch CNBC today and watch the Bloomberg, everybody is singing the praises of the bailout plan and the 146 billion. Yes, it's big amount, blah blah blah. But and everybody's assuming, even though there is this the people rioting in the streets and stuff like that, there is this discontent. But that is the vote of the market on that bailout plan. And you don't need to be an analyst, you don't need to be a fundamentalist, you don't need to be Goldman Sachs, you don't need to be anybody who is or a talking head or a pundit. That is, the market is telling you that 146 billion euro that is coming into Greece is going to have a negative effect. And from now on, what you need to be doing is to be shorting the euro, because now the market has voted, and that is the action. You had a good news, or again, assuming that the bailout is good news, assuming that the Greek government is not going into default is good news, assuming that they're going to get, I mean, think about it, 146 billion euros, and if they are going to save 5% on their notes or on their bonds when they borrow, they have just saved 10 billion euros. I mean, just on 150, you got 5%. I mean, you're looking at 7.5 billion. That's not chunk change. And look at this. That's what the market is saying. So, having said that, that's how we're having some good news, and what we're having on the chart is bad action. And if that's the case, then our decision-making process has been clear, or is now clear, and every move to the upside on the intraday as far as the euro goes is a selling opportunity, and we should be looking at using that rally to short. So right here, right now, looking at this, that is a selling opportunity for us. We should be taking a short somewhere over here and placing your stop right above the high, so you got 14 pip risk on the trade. We will do that in the Tokyo session, but you're looking for a further decline. That's a pretty push to the downside. Again, another push to the downside. This is a gift, guys, and we should be looking at shorting that. So as long as we're below the 130th. So just to make this simple, we're going to go short because of the people that are our guests. So we're going to go short below 131.80. I'm sorry, this is, we're going to go short below 131.83. And we're going to place our stop right above the 131, which is the point where I said 132.14. Okay, and I will not touch it for the long side unless it gets above the 132.66, and it is also my structure. In this case, it's a structure short. It is going to be a structure long. And our next structure short to the downside is the 131.15, and this is probably what's going to be tested in the next push to the downside, which is the 131.15. And if we are going to go short below 131.88, we're going to place our stop and where we're going to go long 32. Okay, so this is kind of easy. This is the euro dollar. Okay, we're only going to buy it above 132.66. It is the long point, it is the structure point, and it is our short, our stop. Okay, if it comes below 132.66, I don't want to be in it long at all. All right, guys, I want to reverse and go short.